Hi, I'm Sofia Song, Head of Research at StreetEasy. We just released our first quarter Manhattan market report for 2013, and today we're at the Baccarat Hotel and Residences New York Sales Center to talk to Kennedy Mack, President of Corcoran Sunshine Marketing Group. Corcoran Sunshine is a leading new development authority with $30 billion in sales and more than 25 years of experience. Their portfolio includes 56 Leonard and the Apthorpe. Welcome, Kelly. Thank you so much for joining us today and giving us an inside look at the Baccarat Hotel and Residences. So our report found that this quarter, contract activity reached fever pitch levels, actually an increase of 15% since a year ago, and reaching the highest Q1 levels since 2008. I wanted to ask you, how has this played out in your recent experience?
The prices in today's market are, extraordinary. Year over year, we're seeing price increases consistent actually with the increases in terms of contract activity of just about 25%. So the average condo price today is trading for over $1,700 a square foot, which I think could be the highest ever.
So now let's talk about inventory. That was a big story for 2012. And again, this quarter, we're seeing that inventory levels are about 17% below what they were a year ago. What do you think is driving this?
Inventory has continued to decline for 8 consecutive quarters. It's 50% below the peak of inventory, which was in first quarter of 2009. The biggest contributing factor to that, I think, is the lack of new development introductions that we've seen, primarily because of lack of construction financing that's been available over the past 5 years. If you look at sort of historically what's happened in the new development marketplace, if you look in 2007, there were over 8,000 new development units which were introduced to the market.
Right.
Between 2000 and 2009, on average, there were about 3,000 units per year. What we're looking at over the next couple years is an average of just over 2,000. And with growing demand and limited product introductions, the supply is just continuing to shrink and shrink. So the new development side is having the biggest contributing factor.
So we've seen high contract activity this quarter as well as low inventory levels. And we've also seen 26% more price increases this quarter, as well as 40% fewer price cuts. Many are saying that the market is hot, and all these signal to what looks to be a seller's market. Do you think that the market is in recovery? And do you think that a healthy market is when it's a seller's market?
By real definition, I would say a healthy market is when the market is in a state of real market equilibrium. And that's when supply and demand are on equal footing. We reached that point in the market at the midpoint of last year, at the end of second quarter of 2012. And since then, in many instances across the city, in many different submarkets, we're actually working ourselves into a more undersupplied condition. So as a result of that, we're seeing, upward pressure on pricing, but there's definitely a level of sort of inconsistency in different sub-pockets of the city. But overall, I would say that we are in what I consider to be a very healthy market, but working ourselves very much into a stronger and stronger seller's market over the next couple of years.
Do you think that some buyers have already been priced out?
As numbers continue and the market fundamentals continue to favor a seller's market, and there's continued upward pressure on pricing, and we're looking to the future of the average price per square foot increasing above $1,700 a foot, there's going to be many disappointed people out there that find New York City no longer affordable when they're looking for a condominium, particularly in the condominium sector.
So what market-wide trends do you expect to see for the rest of 2013?
I think we're going to see continued demand, if not rising demand, from both foreign and domestic purchasers. I think we're going to see continued decline in inventory as the new product introductions that are introduced are absorbing so quickly into the market that they can't keep up. And as a result, I think we're going to continue to see raising prices.
Thanks for watching, and be sure to check back for more videos with Kelly Kennedy Mack.